Good morning, everybody. Welcome back to the Prestige webinar series. My name, for those of you that have been on these webinars, is Jason Flynn, and I am the Director of Human Resources and Client Services for PrestigePEO. Joining us again today is the founder and principal of PrestigePEO, Andrew Lubash. With so much beginning to percolate on the regulatory side of things right now, obviously the election coming along, and obviously in the PEO world in general, it's great to have Andrew's expertise available to us each and every time we have these webinars. So happy to bring Andrew on these calls again today. And of course, we also welcome back our tax manager, Carol Sawyer, who is all too familiar to these webinars. And Carol will be running through most of the details for you this morning during this webinar. Now, as for today's agenda, Andrew will be kicking things off with a few words that he'd like to say for everyone. From there, Carol will take the helm and start to break down some of the finer points of the Paycheck Protection Program loan process and reporting. This is something that we've been discussing obviously quite a bit, and I don't see it going away. And as additional details come out and the information that we want to get to everybody, as well as the processes that we put in place, it's important that we do discuss what we can do for you. So as going through the agenda, this will also include a review of forgivable and payroll costs that can be included, as well as going through some factors that can reduce the forgivable amounts and avoid certain penalties. We'll then introduce the new application and loan forgiveness timeline before wrapping things up with the recap of the loan forgiveness reports that Prestige has created to support this process for its clients. Now, just as a reminder, all participants will be muted throughout the webinar. Now, typically during these webinars, Carol plays a large role in answering the questions that come along. And since Carol will have the lion's share of the speaking portion, we do have some others that are going to help us out with those questions, but I just wanted to preface that by saying that if we aren't able to get to your question this morning, we will most certainly respond to it right after this webinar. But please do use the Q&A feature within the webinar to direct a question to the panelists, and like always, we will do our best to get those answered for you. A copy of the presentation will be available on the Prestige website following the webinar, as well as a recording of the actual today's webinar itself. So with that being said, I would now like to hand things over to Andrew Lubash, who'd like to say a few words. Andrew, the floor is yours.
Good morning. Got it. Good morning, everybody, and thank you for attending. Again, I hope you find these webinars informative, and I hope everybody is well and safe. As we start to head down the home stretch of toward our presidential election and total chaos, doesn't matter which side of the aisle we are on, it does seem a little volatile, to say the least. What's happening also is there's a push, obviously, for new stimulus package. Again, there was supposed to be a deadline of today. I don't think that deadline is going to be met. It may be extended. So again, keep aware as anything happens. We will be researching it and working with our contacts to be able to bring you the content as quickly as possible. Again, as you know, with regards to PPP loans and forgiveness, over the last 2 weeks, there's been some changes as well as to the forgiveness thresholds, the forgiveness policies, and the application process has changed a little bit as well. So again, I hope you do find these webinars informative. As always, like I have said, we are available. I am personally available here for any questions or any concerns that you may have. Again, my direct extension, I put it out there every webinar, is 917-258-0223. That will bypass our switchboard. And my email address is alubash, A-L-U-B-A-S-H, @prestigepeo.com. And if you want to call my cell or text me, and again, I only have one cell phone, which I mentioned to everybody, that's 516-680-5021. And again, some feedback, I'm glad to find out that people are finding these webinars to be informative. We will continue to do them. Again, and keep in mind that they all still are on our website, the slides as well as the recordings of the webinars are on our website under the Resources tab. I know a lot have called me over the last week looking for some of the past ones, and we've been able to direct you that way. So again, keep in mind, even everything that's here, if you want to share this with somebody, they don't even have to be a Prestige client. Anything we can do to help anybody out there, we'd be happy to do and answer any questions. So instead of sucking the rest of your time down and trying to get you through this as quickly as possible, because I know we're all busy, I'm going to turn it back to Jason and Carol. And again, I hope everybody again stays well, stay safe. And again, I am available. Anybody needs to speak with me. Anyone has questions, you know, feel welcome. I mean, I don't give the contact information for you people not to call. Okay. So, all right. Jason, Carol, as they used to say in the old days, away we go.
Thank you, Andy, and I appreciate you hopping on to talk to everybody this morning. So at this point, Carol and I work very closely together within the office in support of our clients. So I know that Carol has worked hard to put some information together for everybody today regarding the forgivable costs, the loan process, and the reports itself. So I wanted to hand things over to Carol, who will be speaking to everybody this morning. Carol?
All right, thank you, Jason. Welcome back, everybody. I can, for those of you who are frequent listeners, can promise that there is limited math involved this time. There is quite a fair amount of math when you're doing the application itself, but we're not going to bore you with that today. So at a very high level, a quick review here at this point is let's remember that payroll costs and non-payroll costs are eligible for forgiveness. And once again, the PPPFA, the Flexibility Act, changed that percentage to 60% needs to be spent on the payroll costs. And that applies to all loans, whether you received one in the beginning or received it toward the end. That 60% applies to all of them. A quick review again of what payroll costs are forgivable. I'm not going to read through all of these. I am going to, number one, point out what is not eligible for forgiveness. Specifically, the qualified sick and family leave wages under FFCRA, and any wages paid under SDI or PFML insurance. Specifically here in New York, we have both of those coverages are state mandated, and those are not eligible for forgiveness. But also want to remind don't forget about the paid or incurred rules. So it's cash that went out during the covered period, and then also those wages and expenses paid on the next pay date that follow the end of the covered period, which is a very important note that I'll skip ahead just in thought for a moment here regarding the Prestige report. We cannot run that report and get accurate numbers until the check date that includes the pay period that has the last day of the covered period included. So, you know, if you're a weekly payer, but with a week delay, so the check this Friday might be the end of your covered period, but this Friday only includes hours worked through last Friday. So you're going to need to wait another week to have that report run. So now we know what's forgivable. Let's once again an overview of what reduces that forgivable amount. And these two items are here because the intent of these loans was to get money in the pockets of the American worker to keep the economy going. So the first thing that will reduce it is if you had a reduction in FTEs, full-time equivalent employees. If you had to, if you let people go and got the loan, that wasn't the spirit of the loan. Or if you then had more than a 25% reduction in their salary or wage rates. Now, yes, if you had an FTE reduction, people made less money, so we're not going to double hit you, but if you reduced their rate, so somebody that was making $30 an hour, if you reduced them to $20 an hour, that's more than a 25% reduction. This only applies to the employees that worked for you in 2019 making less than $100,000, or any new hires in 2020. And this comparison of wage rates is covered period compared to the first quarter of 2020, back when life was normal. So one of the trickier calculations is how to determine, is there an FTE reduction? So this is an overview of how that calculation works. And what I've also done is let you know where these numbers appear on your Schedule A in the Prestige report that we send you. So step one is, what is your FTE score during the covered period? Step number two pulls the FTE count from one of two look-back periods. And you do get to choose, and we choose automatically for you. We look at your FTE for the period in 2019 and for the first 2 months in 2020, and our report pulls the lower of those two numbers, which is what you're allowed to do. And then you divide. And if the result on step 3 is less than 1, that shows that you have a calculated reduction. That doesn't mean you're going to have a reduction, but that the first calculation indicates that there has been a reduction in FTEs. Now, there are some exceptions to this, which again, we cannot take into account in the Prestige report because this is information we don't have. And what are these exceptions? Well, these are positions that you attempted to hire these people back, but for whatever reason, they did not accept your offer, whether it was the wonderful pandemic unemployment assistance at an extra $600 a week that kept them away, fear of the virus, a host of reasons why someone may not come back. Excuse me, if you had unfilled positions and you just couldn't find anybody that was qualified. You're also allowed to fire people for cause. You're not forced to keep people on just to maintain your headcount if they clearly need to be let go. Someone may have voluntarily resigned or voluntarily said, look, can I work less hours? Now, these are all exceptions that will be listed on Table 1 when you submit your application that you'll be able to add into that FTE count for the covered period. This you will need to do on your own because, again, we don't have that information. I suggest you keep all of the written documentation. You're subject to audit on this for a number of years. Some of the bills have included extra money for the SBA to be able to audit these forgiveness applications. Whether that comes to pass, I don't know. And once again, so these exceptions will help you pass the test, but there isn't a guarantee. You may still add some of these back, and you would essentially be adding them back in step 1. You may still have a quotient below 1. So what do we do next? Because we want this full loan reduced. Well, there are a number of safe harbors, specifically that were brought in by the Flexibility Act passed in August, if my memory serves me correctly. If either of these two apply, these two items listed, the number reverts to a 1. And once again, this is not information we have, so when you file your application, you can change the number that is on line 13 to a 1. The first is if you can document that you were unable to operate at the same level of business. And the way the legislation is written, it says if there are restrictions from Health and Human Services, CDC, or OSHA. Well, this can also be if it was a state agency or a local agency. Not all the states and cities are the same. New York City's reopening schedule has been much slower than even the state of New York and other states. So if any agency has said you cannot operate, then that provides a safe harbor against the FTE reductions. The other safe harbor is if you were able to restore all of your employees either by the end of 2020, which hasn't happened yet, or after your covered period ended when you're making the application. This date is a little more vague, but if you can show evidence that on a payroll subsequent to your covered period, look, we had everybody working full time, you again then get that safe harbor. You pass the FTE reduction test automatically and don't face any forgiveness based on FTEs. Now, there is also the issue of the salary and hourly wage reduction. And so there is a safe harbor for that as well. One thing I did forget to mention on an earlier slide in regards to the salary reductions, that does not apply to commissions. There are a lot of professions that are commission-based that, due to the economy, they're not getting as much in the way of commissions. That is not considered a rate reduction for the PPP loans. So here's an overview of how the safe harbor calculation works. We do carry this through in one of the many tabs in that report we sent you. And what we're essentially looking at, did you get the employee back to their regular rate of pay prior to submission of the application or by the end of the year, whichever may come first? Again, they wrote this into the legislation because they recognize the economy's been slow to improve. And so whereas if your covered period ended in September, but that person I mentioned earlier that you had at $30 an hour went down to $20 an hour, and you then got them back to $30 an hour in November, then you have a safe harbor. You get out of that reduction in forgiveness. So let's talk about the EZ application that was reduced, which was made available in June of 2020. This allows borrowers in one of three categories to have an easier application and not have to go through the full thing. I'm going to take a moment and address a question that's come through the chat because it's just, I think everybody would want to hear it. It was a question regarding loans below $150,000 being forgiven automatically. There has been no further talk of that, and you'll see a little bit shortly that there is a different application for loans under $50,000. So they're making an effort, but not quite with the threshold that had been mentioned before. All right, so who can use the EZ application? Well, first of all, it's self-employed individuals, sole proprietors who had no employees, either at the time of application or in the covered period. So very simple method for those people to apply. The second are in businesses that had no reduction in FTEs or reduction in salary and wages. In other words, you were able to sail right along through the covered period. You can use the EZ application. The last one is you didn't reduce the wage rates at all, but you were unable to operate at the same level of business as before February 15th. Prime example of this would be restaurants. They were not allowed to open for indoor dining. Some eventually got outdoor dining. They only had takeout. So they didn't reduce wage rates at all, but they had to reduce their FTEs solely based on the fact they weren't allowed to open. That type of business can use the EZ application. And remember, this is also why they created two different covered periods. You could either use 8 weeks or 24 weeks for your covered period to recoup your costs. So again, the government made some adjustments as they realized that the economy wasn't going to bounce back as quickly as we all had hoped. So the great thing about the EZ application, You don't have to worry about your FTE scores. There's no reductions for wages. You don't have to include the Schedule A worksheets and tables. You don't have to list your employees. It is a simple one page with figures. The second page has attestations you need to sign off on. And it's that easy. There will be supporting documentation you will need to provide. I believe a number of our clients, I do know personally of 3 clients that have successfully submitted their application to Chase Bank. There may be others, clients that haven't spoken to me directly about the forgiveness process, and they've included our Prestige report as a part of their application. So it's easy and simple. I do want to take a moment to point out that there is an expiration date on all of these applications. Apparently, there's some government regulation from OMB that there has to be some kind of date. I guess they panicked quick and picked October 31st. This application does not expire. You will be able to use this application through all of October, November, December. You could even move into January and February before you file your application. To present an ever-changing landscape, SBA released a new forgiveness application for borrowers who had a loan amount under $50,000. Now, there is a catch to this for affiliated groups, that if the affiliated group resulted in more than $2 million in loans, then nobody in that affiliated group gets to use the 3508S to apply for forgiveness. So this would be a franchise-based company that applied for each location. So a location may have been under $50,000, but once you brought all the locations together, it was more than $2 million. Those companies will have to use either the EZ form or the long form to apply for forgiveness. The rule issued at the same time as the application provides that the borrowers are exempted from any reductions. So if your loan amount is less than $50,000, you just, as we flip to the next screen, it is truly just a one page. The attestations and the figures are all on one page. You will have to, I will point out, you do have to mention if you did get one of the economic injury disaster loans that had a grant portion to it. Federal government said they will only hand you free money in so many ways. So if you had a grant from that, that will reduce your forgiveness on this. But it is a very simple and easy application that can be submitted for forgiveness. So that's the last of the applications, because we're not going to go over the full one, as both Andy and Jason mentioned. The previous webinars are on our website, and we do walk you through in detail of the more of the long, full-length application. So let's start looking at the forgiveness timeline. Now that we're all in that, we're approaching that mode, even borrowers that are using a 24-week covered period, those are coming to an end. I will also again point out with the 24-week period, you didn't have to go the full 24 weeks. You were allowed to cut that off earlier. Typically, companies are doing that because they've run out of money and therefore need to lay people off, and so that would affect their FTE count. So the Flexibility Act, apology for the typo, I should have one more P in there because it's PPP-FA. Lenders have to allow all borrowers deferral until the date which the amount of loan forgiveness is remitted by SBA to the lender. What that means is SBA has signed off on the forgiveness amount that the lender, because once again, this decision starts with the lender, the SBA has approved the lender's forgiveness and given the money back to the bank. That is when the deferral period ends. The lender is responsible for notifying the borrower if at that time, if there was an amount that wasn't forgiven, when the first payment is due and what the payment schedule is. If a borrower waits and doesn't apply for loan forgiveness within 10 months, so that takes us far into next year, at that time, the loan is no longer deferred. So while we tell you to be patient and not rush, there is an ultimate deadline of 10 months after your covered period that interest will start accruing and you will still need to make payments. Now, there was some confusion when the Flexibility Act came out of whether or not lenders needed to rewrite the documents for the loans issued before that time to indicate the change in the deferral period, and that was not needed. Once the Flexibility Act came into law, this applied to all loans, regardless of what was written into your loan documentation at the time that it was issued. So what does the timeline look like? We start with step one. The borrower submits the loan forgiveness application. The lender at that point has 60 days to issue a decision to the SBA. They will submit your application and your supporting documentation. If the lender in that 60 days decides, you don't get full forgiveness, the borrower then has 30 days to notify the lender that it wants the SBA to review that decision. Now, once again, I was going to mention this later, but I'm going to mention it now. The SBA has made it very clear to the lenders, please work with your borrowers to ensure that they have all their ducks in a row and have all the proof that they need to get full forgiveness. It was not the intent of Congress for all of these businesses to end up with loans that they had to struggle to repay in an economy that has not rebounded. So the lenders should be working with you to help you get full forgiveness. So the borrower notifies the lender within 30 days. The lender then has 5 days to notify the SBA. The SBA then has 90 days to review the lender's decision. This is still a long process. From the time you submit your application, it could be 150 days before you get confirmation from the lender that they have heard from the SBA that your forgiveness amount has been approved at whatever level. So we're in this for the long haul, which does bring about a complicating factor that we have no answers to. Just going to make you aware that we are aware of the problem. 150 days could very possibly take us past the March 15th, 2021 deadline for corporate tax returns for the 2020 year. And so we do not have an answer as to whether the costs that you've submitted for forgiveness are deductible on your tax return. Hopefully someone brings this to the attention of Congress so that they can get to work on that, because you will need to start filing extensions, estimates, if you're a C Corp, S Corp. There's a lot still unknown that we don't know. I will say that our membership in NAPEO gives us a wonderful connection to Washington. They are tapped in completely with all of the conversations that are happening. We will, once there is a decision made, we will be able to let you know so that you can notify your accountants of what the changes are. Now, there is an appeal process. There are some decisions that can be appealed. Certain SBA loan review decisions can be appealed to SBA's Office of Hearing and Appeals within 30 calendar days of either the receipt of the SBA's decision or notification by the lender of the SBA loan review. There are 3 different items that can be appealed. There are a couple of things that cannot be appealed. I do not expect this to be an issue specifically for the Prestige clients or any borrowers. Once again, this is not the intent of the legislation. They have built in a lot of ways for everyone to get full forgiveness, but there is a process should you need that. So now let's talk about the Prestige report that is delivered to our clients in an Excel file. We have done that specifically because, as I mentioned earlier, there are some aspects of the application that we're not privy to in terms of safe harbors that are met after the report was run, FTE exceptions that I listed on earlier slides. And there is 10 different tabs in this Excel file. And it can be a little overwhelming at first. So I'm going to go through the way I think this file should be opened to have the best understanding of the information that you're looking at and where are you headed in your forgiveness process. The fourth tab in the file is the Schedule A worksheet. And this is the summary of the 3 tabs before it and the 6 tabs after it. And this gives you the picture of where am I at. The first 3 lines are information from Table 1. Table 2 is the next 2 lines. Then we bring in the non-cash compensation costs for benefits and taxes and retirement plans. Then the owner line is line 9. Once again, your owners of your businesses need to be officially flagged in PrestigePEO in order for those wages and compensation to flow through that line. So once again, this is the first place to look, because if you have an owner that is flowing through to Table 1 or Table 2, you need to let your payroll specialist know. They will correct the system, will rerun the report, and everything will flow through to the correct line. So total payroll cost is line 10. That is your figure. That is what will flow through to the main page of the full length forgiveness. That is the amount that needs to be 60%, at least 60% of your loan amount. Can it be 100% of your loan amount? Absolutely. The reason Congress wrote in that 60-40 split is it's kind of hard to pay people if you can't keep the building open and the lights on. But if you're able to show that you spent all of it on wages and compensation, that's fine. You don't need any other additional expenses. And then line 13, what is my FTE reduction quotient? And this is the original calculation. What is my FTE for the covered period as opposed to one of the 2 look-back periods? If this is already a 1, you don't really need to worry about the FTE numbers in the different tables that we'll go over in a minute, because you already have full forgiveness. So this is really where you should start your review of that very large file that we send you. The tabs before it, if you start with the first tab, is the Table 1 for the Schedule A worksheet and the Table 2. Table 1 being the people that worked for you in 2019 that made less than $100,000, or new people that you hired in 2020. Table 2 is only for people that were paid more than $100,000 in 2019. This can also cause an issue with the PrestigePEO system that, once again, we can correct on a client-by-client basis. Some of you have set up very specific pay codes that you use for your payroll that may not be flowing through correctly. Once again, if you see somebody on the wrong table, let us know, and we'll be able to make the fixes in the system, rerun the report, and everyone will flow through. Now, as a client, if I had opened this up and I got to Table 1 and I'm like, wait a minute, Angela's only at a 0.8. Wait, that's going to reduce my forgiveness. It may or may not. Go to that Schedule A, that line 13. If you're at a 1, It doesn't really matter what the numbers are for each individual here. The legislation and the application require us to use a 40-hour work week. Well, we have many clients that 35 hours a week is what full-time is. That will result in less than a 1 in this column, but that was also true last year. So when we compare from the covered period to the look-back period, you're still going to get that full forgiveness. The next tab, as I'm working back my way through, is the Schedule A FTE Safe Harbor calculation. And this is the safe harbor that was brought in with the Flexibility Act that is having you looked at what was your FTE count before the world shut down in February, what is your FTE count right after the world shut down, and where are you now? And this applies to clients that everything was great on February 15th. You had to lay everybody off because it's March. The world has shut down. You're not operating based on your business. There is no legislation yet. This took a little bit of time, and then you had to apply and get the loan. Well, you shut down. There was no money. But then you opened back up when you got this loan, which was clearly the intent of this legislation. So your FTE at the end of the covered period, if it shows that you've been able to restore all of those positions, your FTE quotient becomes a 1. Once again, I think about the intent of the legislation, which was to get everyone back to work, money into the pockets of the U.S. workers. So this is also one of the tabs in our file. Now, as wonderful and amazing as this report is, it cannot cover everything and does have its own, there are client specificities that could not be built in. The first issue, which I've already talked about once, is you have to wait until the check has been cut for the pay period that included that last day of your covered period. The safe harbor is not going to work that I just spoke about because that pay period has not been paid. So as far as the PrestigePEO system knows, nobody worked that day. Safe harbor calculations. Some of those are based on you restoring either wages or FTEs after the covered period. We don't have that information. So when you file your application, yes, this is our report is documentation of money spent, but you can change the calculation because you qualify for a safe harbor that just could not be brought into this massive and wonderful report that the people of Prestige have been able to bring to you. The other question that I'm seeing a lot is clients asking, well, should I choose 8 weeks or 24 weeks? That is not specifically a choice we can make for you. We can run both reports. I can help point out to you how those different numbers would flow through to your application. But that is a decision only the owners and the people who signed off on your loan application and your loan documents can make. We can help guide you and show you the figures and how they work through the application, but we cannot make that decision for you. A little humor at the end. I want you all to relax. There is no rush. For those of you that have gotten an email invite from your lender, clock is ticking a little bit for you because if they've invited you, they want you to do it now. As I said, we've had at least 3 clients that I know of that have applied through Chase. They're now awaiting their decision. Chase accepted all of the Prestige documentation that we provided our clients. Once again, when you sign these forgiveness applications, the lender is allowed and has been told by SBA to rely on the attestations from the borrower saying, I spent this money. So please don't be in a panic. keep calm. We will help get you through this process. And that ends my presentation.
Thank you, Carol. Really appreciate the contributions that you've made to this webinar series and everything that goes on. We've been talking about this loan process in some fashion or another since April 1st, and as Carol mentioned earlier on, it's not likely to go away anytime soon. We're going to be having these conversations. Things change, regulations change, things are amended, and we want to make sure that everybody's prepared. I do know, and I have to say that I'm sure that clients that are on this call are used to speaking mostly to their HR business partner, their benefit specialist, their payroll specialist. But there is a lot of work that goes on behind the scenes, and Carol's a very big part of that. So I do thank you for your contributions and going through everything with everyone on the call today. Our intent is that over time, not only will we speak about this loan process and give you the direction that you need, but also sprinkle in some other relevant areas such as HR, benefits, and payroll, and things that are important to your business as we go along. And those are things that we discuss on a weekly basis. So with that being said, I do urge everyone to keep an eye out for their client communications and the Insights newsletter that we send to all of our clients with all of this information. Please hop on to our website to view not only this webinar, this slide deck, and the recording, but also a wealth of knowledge around, COVID-related information, as well as many other types of human resources, benefits, and payroll, and compliance information. And always feel free to reach out to your client support team over here at Prestige. Thank you again for spending some time on your Wednesday morning with us, and we look forward to speaking with everybody soon.